equitystrategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Thursday, April 17th. We have a somewhat relaxed day coming up, starting at 12:30 GMT when we have an inflation report from the Bank of Canada, which could generate some volatility in the Canadian dollar and, of course, Canadian stocks. At the same time, we have employment data from the United States, this is weekly employment data. And then at 2 o'clock in the afternoon, we have a report from the Philadelphia Fed which could give some insight into the American economy. Moving over to stocks, the S&P 500 moved higher yesterday. This was after a better than expected manufacturing industrial production report, and also during a speech, the Fed Chairwoman Janet Yellen said that the Fed will be continuing to support the American economy for quite some time. This optimism continued during the Asian session, with Asian stocks closing higher. And then going into the session today, the S&P 500 futures are trading down by 0.2%, which is to be expected going into the long weekend, especially with the continuing tensions in the Ukraine. It's causing a little bit of risk aversion, which would make investors and traders want to consolidate their positions, before the long weekend. Moving over to the euro, yesterday moved above 138.40, which is a relatively weak level here. We still have an important support here at 138, and 139 is a resistance level, but we don't have any major news coming out today which would generate a lot of volatility here in the euro. Similar situation we have with the pound. However, yesterday the pound broke above 168.25, which had been the previous high. This is the highest the pound has been versus the dollar since 2009. However, after this strong move on the upside, we could be looking at a short-term, relatively short correction. In terms of levels, we have support at 168, and then our next level of resistance is at 169. And the Japanese yen, the Japanese yen versus the dollar came up to 102.25, tried to get through that but failed to do so, and is keeping within a range of 101.30 and 102.30. And then finally we have gold, which was pretty much unchanged yesterday after this strong move on the downside. Considering the situation, the improving situation of the American economy, there isn't all that much demand for safe haven assets, but there might be a slight move on the upside or slight upward pressure today in gold going into the weekend. But the general interest in safe haven assets at the moment is waning, especially considering the statements from the Fed. And so that's it for today. Thanks for watching, and happy trading.